times we had. I see it now, I see it now. Real love, now I'll break through to show to you that I'm more good than I am bad. I'll work it out, I'll work it out. And I'll be somewhere that you need me, and I'll be holding my breath, waiting for you to show. Afraid to say real love, now I see you, and I'll make it through to find the life that we once had. I see it now, I feel it now. Real love, now I see you, yeah, you know I do, to make it through the times we had. I see it now, I see it now. Now I'll break through to show to you that I'm more good than I am bad. I'll work it out, I'll work it out. And I'll be somewhere that you need me, and I'll be holding my breath, waiting for you to show.
What's up, guys? What's going on? Give me a sound check. Good afternoon, good evening, good morning. Let me pop the chat out. Should be good. Hopefully you guys can hear me nice and clearly. What's going on, Kilgore? Music is clutch today, Ryan. Thanks, JE. You know, it's a pain in the ass because I have to find the copyright-free playlists. So, you know, I would love to play some more well-known jams, but it's good to give love to those who right now are maybe up-and-coming artists and they don't have, you know, the songs copyrighted. Ultimately, they should, but YouTube pulls you down if you don't. So, sound is good. Sound is clear. Awesome. Cornholio, what's up, buddy? It seems like you get the first comment always. What's up? LP, Julin, Luna, hey, Banks. Yes, gloomy day here in NY. I hope it's nicer where you are. Yeah, man, it is gloomy here as well. Hopefully get some snow this week. I like the snow when it first arrives. I hate it after a few days when it's got all the shit all over the place. Kenny Powers, David, Skelko, tell you which crypto to YOLO on today, please. It's funny that you say YOLO because JP Morgan is offering a structured product that was labeled as a YOLO product this morning, and it's basically the ARK ETFs in a triple ETF sort of 1.5 leveraged product that is really a sign of the times, if anything. Trump just pardoned Joe Exotic. No, I think he pardoned Julian Assange, right? It would be nice if he pardoned Ross Ulbright, right? Who's in jail in a life sentence, I believe, for his relation to, what was it, Mt. Gox or something. I know he's crypto related. I feel bad for not being able to immediately pull it up from memory. Kel, what's up, man? Listening to the Prime Minister of the Netherlands. JE, okay, hola. Yeah, VXX versus Spy. Kilgore, what's up, my man? I said hi to you, I think. Kevin, what's up, fellas? All right, Carlos Cifuentes. Okay, so we have a good amount of 9 p.m. in your time zone. What's up, man? Banga, how's California, man? We're talking this morning. For those of you that don't know, Banga is he has been a longtime member of BlockRoots, but when he came to New York, we hung out, and he was a really big. He still is, still is a big rap artist from Argentina. The kid has more followers than most of the larger people on crypto Twitter combined. Okay. All right. Let's see. Okay, so we're going to talk about a bunch of things. It's Monday, so it's like, it's kind of all over the place. We're going to talk about BTC. We're going to talk about some DeFi. We'll talk about the news, unpack, what events have occurred over the weekend. And maybe give you a clearer idea going into Wednesday, which is ultimately where we focus on mostly just Bitcoin and I guess the alt majors. Yeah, how is everybody doing? If you're new to the channel, my name is Ryan, aka Kenner and Clark. On behalf of my partner Josh Rager, we want to thank you guys for tuning in. We have it looks like we have a healthy amount of viewers right now. I think that when we switch it, and I have done this periodically where I switch it to 1 p.m. versus 12, it looks like we lose a few people. We're all coming from different time zones. I am based out of New York. So this is the second or third time we've done it at 1 p.m. Eastern Standard Time. So, hopefully this doesn't screw up everyone's schedule. I just noticed a little bit of a dip in the viewers. So, thank you for tuning into the BlockRoots YouTube. As I've said, there's a plenty of great crypto Twitter accounts. On YouTube, it seems to be sort of a barren land or garbage dump of crypto YouTubers who really just try to spin off of sensationalism. And what we want to do, or what our goal is to be the non-sensational source of trade-related, invested-related education when it comes to the crypto markets. And obviously, we go into traditional markets as well because I spend a good amount of time trading traditional markets. Thank you for everyone joining. If you could go ahead and bring that like button up a little bit. The like to concurrent viewer parity right now is looking really weak. If this was a gold and silver trade, we would be really trying to close or arb that gap. So if we could get the likes up, that'd be fantastic. And we'll start it up in a minute or two. Yeah, so yeah, you're the man, Banger, you're the man. Um, so I appreciate your Twitter funny this morning. Yeah, so I was so long story short, I always get into like my personal life, and I give a little bit of a story, and a lot of them revolve around my wife because it's just me and her in a two peas in a pod. So last night I got to bed kind of late. I ended up closing out what was I think it was either 13th or 14th trade win in a row. So that sounds kind of ridiculous, but it's actually not, because it's, for one, it is I'm trading mostly this lower time frame strategy that I've been working on, and it's not exactly the highest yielding opportunity. It might not look like it to many, but I throw a good amount of size on it. It's a scalping method, and my hit rate for it is around, as of the last 50 to 100 trades, is around 80%. So, you could see how, if you just look at the normal distribution of win rates, and, the expected string of losses you can have, and expected string of wins that you can have, with a hit rate of 80 to 90%, in in like a 50 trade sample, and a 100 trade sample, and a 1,000 trade sample, you could be anywhere up to, I think max you could have, or what might be expected is, you could have anywhere up to 30 to 40 winners in a row, right? With a hit rate that high. So obviously, you have to have an understanding of where you sit with regard to certain things like that, because it's one thing to see that and get very confident. It's another to know that, hey, it's just really part of it's a part of what is to be expected statistically. So the same can be said, when you have, and this is sort of the little segue, and I'll get back to the story as to why I sort of woke up the way I did. When you have a system, the benefit of using a system and continuously practicing the system and sticking to it, is ultimately you get a feel for the data that this system spits out. So you will know, after a reasonable sample. Let's just say, some people say 30 trades, 40 trades. I'd say obviously the more the better, but you don't want to really lose the house when you're trying something out. If it's not working, if nothing is sticking when you're throwing it against the wall, you just got to, can it at some point. But the benefit of having a system is, I know, okay, one, I know that I shouldn't get too irrationally exuberant whenever I'm having a streak like this, because it's expected at some point. And two, the benefit for a lot of anyone who's new is that if you're on trade 4, 5, 6 losses in a row, okay, well, my hit rate sort of, it implies, or what is connected with that is a potential to have a certain amount of losses in a row, right? To go on sort of that streak. They call it a hot hand in basketball. Someone who's at a slot machine might experience that as well. But really, it's just part of the distribution. So obviously, you want to have a higher hit rate. That doesn't necessarily mean you're going to be a successful trader, though. But so I closed out what I think was the 14th trade in a row, and it was just like a good weekend, right? But last night I didn't get to. I am sporting a ponytail, my man. Last night I didn't get to bed early, because I'm getting ready to go to bed. My wife fell asleep earlier than I did. I'm staying up, moderating some positions, deciding if I want to stay up a little bit later and look for another opportunity. Kind of stupid, right? It was a Sunday night. We had DoorDash delivered, had a big sushi dinner, and so my cat, our new kitten, was on the bed when I walked into the bedroom. And I'm just like pulling back the covers to try to, not to stir either of them. And my cat burst up, okay? And the first place that she jumped was my wife's face. And she, when cats jump, they have their claws out, and they're trying to gain some type of traction to be able to make their next jump. And so unfortunately, her landing and launching pad was right on my wife's face. And my wife took a big claw into the eyelid, and has a huge scratch across her face now. So she wakes up, and it's actually bleeding pretty considerably. It's thin skin on your eyelid, and so I'm up with her, and doing the whole Neosporin thing, and being a good husband. And so I didn't get to bed, as when that happened, it was like a spike in my adrenaline. So I didn't get to bed as soon as I wanted to. I woke up this morning, I looked at the chart. Okay, we'll look at a chart right now, and we'll go over some things I want to go over. I looked at the chart, and I was like, if I look at this on the higher time frame, we just get rid of some of these things. Again, I've been sort of beating this drum for a while now. What has happened in the past? We've had, after impulses, the market spends, in normal market conditions as a whole, you'll see that the market spends 70% of the time consolidating, right? You go from impulse to consolidation to impulse to consolidation. And this kind of context is what we try to pick up on when we're using something like market profile. But we're looking at a massive trend, and everyone is kind of expecting that it's going to continue a lot faster. And if you just look at sort of the historical results of previous consolidations, or rather impulses leading to consolidations, in this sort of bullish new contextual environment, they all have resulted in longer duration consolidations. And it's like sort of the same story at the highs, at the lows. Everyone is really bullish at the highs. Everyone is really bearish at the lows. The one thing that doesn't lie or doesn't really change until it changes is certain positioning, positioning, or rather conditions with regard to positioning. Okay, so ultimately at the highs, we haven't had previously any signs of absorption, so that's great. We haven't had signs of absorption. What we did have signs of was just the delta unwind. You get heavy at the high with the derivative products, and then the market hasn't really caught up to the rest of the spot market hasn't kept up with that. I am sitting in a trade right now, leaving that. Spot market hasn't kept up with it, so the market has to revert back to that spot demand. That's where the organic demand is. So previously we've rolled over, right? And if you look at this structure right here and this structure right here, there is sort of this uncanny similarity or resemblance to what we have currently. Now, I've said previously why this was maybe a little bit flatter, had more of a rejection initially. That was because that was at a major contextual level. Once we've gotten past that, things have very much become obvious to majority of the market participants, and now we're starting to bring in outside market participants as well. So there's a reason why this is going to be, the pattern over here that's drawn on the balloon that is in one level of inflation, and the pattern over here is the same pattern, but it is essentially there's a little bit more air in the balloon at this point. So, this is entirely bullish still. I was just looking at this and thinking, we're looking at, I woke up and I'm seeing Coinbase is trading at, it was around, a $10, $15 discount. So there is that basis, that negative basis between futures and spot. If we look at, something like the premium index, this is all, again, just an indication right now that traders are getting a little bit heavy on the derivatives products. But as I've said before, there's been multiple shakeouts. At some point, people on the futures exchanges, it doesn't mean that no one can get a long on before the trend resumes upward. It just means that a lot of the times you do have this crowding that does need to get shaken out. So I looked at it and I'm thinking, the market's going to roll over, and then what do you know, I ended up getting into a long. So we'll get into that. I'm going to leave that right now, but it was just my feelings upon waking up and not really having the normal early morning that starts off at like 6 o'clock. So I ended up, I say late morning for me, which means I'm still up by 9 o'clock. But let's look at, let's unpack some of the stuff that is relevant. So that thing I was talking about with the triple ETF for ARK. We all love ARK, right? We all love Kathy. This is something that is kind of a sign of the times. There was a back in 2018, on February 5th, there was something called Volmageddon, and this was when the VIX experienced a 20-point spike. This was primarily due to concerns with regard to interest rates, but we had this spike in the VIX. The S&P sold off, the Dow Jones sold off, but right before this, you have a really flat VIX. And just as a reminder, the VIX and the S&P are traditionally, there's an inverse correlation. There has been sort of a change in terms of the distribution with regard to how index options have been priced recently after the March crash, right? So there is sort of this new low, I would say, in the VIX. But BTC, just as a reminder, is normally inversely correlated with the VIX as well. But so the VIX was flat, right? So people are looking to sell volatility, right? When you sell options, when you sell the VIX, okay, we'll just talk about selling options, you crush volatility, right? So volatility remains low. Then they create a product called the XIV, which is an inversely, it's a product that's traded inverse to the VIX. So you have people that are longing XIV, which is just basically a short volatility play, and they got crushed, right? Because they were essentially betting on no increase in volatility, which kind of occurs which is normally is coupled with a market that is moving up, right? So the S&P moves up Volatility moves down. The S&P, the equity markets, they have a volatility smirk, which is that put skew, right? So when we talk about 25 delta skew, we talk about put skew. Markets grind up, they crash down. So that is sort of the distribution since the 1980s crash that we've seen in option skew. So this is funny because a product like this, which is essentially like a leveraged basket of ETFs, it's funny how it's coming in at really all-time highs for the market. But this is not something that's available to just your normal retail investors. Although there's not much of a distinction between someone who suddenly goes from being a retail investor to a qualified, or a qualified, or a what's the term? I can't just I've lost it for a second. Qualified is a step up higher, but accredited investor. Okay, you just have to have a certain amount of income, a certain amount of money. So this is kind of funny, right? It's sort of like you expect this almost at the top, but yeah, point that out just for the sake of comedy. All right, so looking at traditional markets really quick, VIX is up today, ES is down today. I say ES, I'm talking about equity futures, but we're talking about the ultimately something that's a derivative of the SPX. So there are some fears right now in across the globe. Rather, there's a new variant apparently of the coronavirus. So new variant obviously is going to instill plenty of fear in anyone right now, really. You have good news with regards to the vaccine. But if you have a new variant, if you have a vaccine, it seems like you're just trying to chase this thing, and it's changing shape constantly. So markets are going to react in fear. Not necessarily sure if that's what we're seeing right now, but there's that. There's potential shutdowns again across the United States, across Europe. This morning, New York City mayor talking about a full shutdown. So, we've seen that the equity markets are not really tied to the economy, right? But that helps when you have the something like the S&P weighted by companies that are doing exceedingly well when there's lockdown. So it's an interesting time. I wouldn't give too much weight to what's occurring right now in traditional markets with relation to BTC, because BTC is kind of, and I just wanted to go over this in the beginning because there are sort of these fears right now. BTC has not shown any kind of short-term or more recent correlations with something like the ES. If we look at just BTC this morning, this is spurious short-term correlation, but you haven't had any kind of positive correlation between the two. So let's look at BTC. I want to make sure there's no questions that stand out. We coming into the high again, as I've said, what I want to see, and it's not like at some point, I want to make this clear. There have been trends post break of high, okay, that have gone on and have included, or once that has occurred, markets have started chasing this with derivative products. So you get a breakout. You get heaviness in terms of that futures basis. So futures are trading more expensively than the spot market. That's going to happen at some point, right? Consistently throughout this bull market, you're going to have periods like that. And just as a reminder, it's not that one is sort of necessarily how do I word this? Just because we see that futures trading at a premium to spot doesn't mean that it always has to mean that the market is going to have a major pullback. This is a good tool to pay attention to determine positioning, right? So we have context and positioning. Those are the two most important things. This is really important when you're paying attention to a market that is still at resistance, right? So when you're still at resistance and you have futures getting heavy, so if you look at something like the premium index trading higher, right, trading positively. If you just look at Coinbase to derivative prices, so for example, there's a $10 basis right now. You have to take into consideration higher prices and how that's actually less extreme at these levels in terms of percentage points. But when you have something like that, when you look at the funding, there's neutral to positive funding across the board. So let me get a different ink. Neutral to positive funding. All right. There's no sign of absorption at the high. So if we look at something like cumulative volume delta, if we just look at the highs of the structure, there's no sign of absorption yet. So we haven't seen a case where the market is, at the same high as prior, and you have, delta that is much more extreme than the prior CVD. So again, buyers are not getting aggressive into the highs and then getting absorbed. It's just that the spot market is essentially, think about the spot market as starting its engine right here, Maybe it's moving up to here, and then the derivatives are carrying it the rest of the way. So you're just seeing this sort of aggressiveness on things like Bybit or exchanges like Bybit, BitMEX, any kind of perpetual swap product. And this is a good thing to pay attention to when you're at resistance, right? Because when you're at resistance, this is sort of the line in the sand. When you are looking for resistance to hold, what are you looking for? You're looking for some sign of a loss of momentum or some sign of absorption. And whether or not we don't have a CVD absorption, we do have the sign that the market is getting a little heavy in this area and there's really not a lot to show for it. So it's really a matter of increased activity for less results, right? So on the perpetual swaps, on the futures platforms, you have a larger amount of contracts that are traded by notional value, right? So you have leverage. Essentially, people are levering these products up. So you have more gunpowder in the moves, but it's not leading the market, right? It's not pulling the spot market up, right? This is an entirely spot-driven move. So the most important thing we're going to be paying attention to constantly is where is the spot market at right now? Is the spot market following? Again, this is into resistance, right? So let's look at the lower levels real quick so that we really just put this in perspective. We are at, so get rid of this. So one, things to pay attention to: impulse consolidation, impulse consolidation, impulse consolidation. People get all worried about, oh, the volume is dropping off. In a consolidation, you don't need an increase in volume, right? You want to see a drop in volume. So we want to see that, into the lows, into the moves sideways, that volume is not increasing, right? You don't need a new amount of activity to keep prices where they're currently accepted, right? Just think of it again as I use this sort of, I said gravity well at some point, but imagine, if you have this sort of impression in the ground, it doesn't take any work to keep an object down here. You have a ball that's down here. It doesn't take any work to keep it in here now. Once it's settled, it doesn't take any work. It's going to take work to take it outside of these extremes. So this is a weird way of visualizing this. But the only place that volume matters now is at the breaks of the highs and the lows. It doesn't matter, it means nothing right now within the structure. If anything, we'd rather see it sort of dissipate and drop off. We pay attention to volume at the level, right? That's how we determine absorption. That's how we determine trap traders. That's how we determine some of the finer setups that we get. But within the level, it's just, hey, this is where things are accepted. This is a really easy area to get flat-footed. So anywhere between the high, whether you're looking at this low or these lows, this is an easy area to get flat-footed because there's a ton of liquidity to grab at any one moment. So there's plenty of, if you want to take it at the bid, if you want to take it at the offer, it's yours right away. So that's easy to get flat-footed because there's really no directional conviction yet from this level. So it's, when we talk about market profile, that's one of the ideas behind it. This is the distribution in the center where buyers and sellers were relatively neutral, right? We're looking for imbalances to occur at the extremes. This is where price is being accepted. If you are taking a position right here and you don't have any kind of edge for doing it, it's like a coin flip and you're basically saying, I know more than everybody else over here that is currently happy to be here, right? They're currently happy and in agreement, and you're saying that you have a directional edge over here. I think that right now in this short-term position, I have had one, and I am now sitting $100 in profit. But remember, you have to really consider that at any given moment, there's completely different approaches, right? So I'm talking about a higher time frame right now. The little trade I'm taking right now really is probably only to 19.4. If anything, that'd be great. So you have the highs and the low of this structure. Now, going back to positioning, if we continue to be rejected at this high and we see that the futures are trading consistently higher and then we have something like increased funding rates, well, shit, then, we're having a trap get set up, right? Once the high breaks, I'm not really concerned with this being maintained because you just have to consider, like, in a bull market, you come onto a product that's leveraged and you're saying, I want increased exposure. Supply and demand, right? Supply and demand states that is going to be in demand more, so you're going to have to be paying a premium to acquire it. So the whole concept of the funding rate to begin with is, when the market is clearly along, who the fuck wants to provide an ask? Excuse me. So who wants to provide an ask? Who wants to sell the market at a time when the trend is clearly along? Well, to create a futures product like a perpetual swap, you have to incentivize someone to take the other side. So you have to pay them that interest rate component, so that they arb that, right? So that's the reason why the funding is there, because otherwise you would never be able to keep a perpetual swap in line with the actual spot price. Okay, they would be in completely different modes of price discovery. So you have to create that incentive mechanism, which means, at some point it doesn't mean that because funding is high that people are wrong. It just means that that product is in such demand that it's really expensive to use it. Okay, so this is just the way that you should start thinking about it. So once you see the break of this high, the funding becomes irrelevant, right? It's not going to, the funding has no bearing on Michael Saylor deciding to buy another $650 million worth of Bitcoin, okay? The funding has no bearing on institutional adoption. It's just a tool that we use when we see, this sort of other confluent evidence that might indicate that resistance is doing its job. Okay, so we see futures markets getting a little heavy, spot market's not following. Okay, we have a little bit of a stronger thesis for some type of, intermittent top being in place. Let me just check my position real quick. Okay, and I like the way it looks right now. Just so we see that Ryan does not LARP. Here we go, decent sized position, 200,000 contracts, and I'm in from 19,143. So anyway, this is, so I didn't take a ridiculous position because it was not something that was offering a tremendous amount of edge, right? But looking at this on the lower time frames, if we look at some of the more important levels, so we do have a few levels that are, confluent with one another. We have a prior range composite value area high. We're accepted back within a prior range composite value area low. So really what we're talking about right here is, hey, and I said this, and people were still selling this over here, and I'm saying, dude, it's not resistance anymore. Okay, this should have done its job. Just think about it in these simple terms. If this was a bearish structure beginning to form, and this was the breakdown, this should have done its job. This said that buyers rejected it. This said that sellers rejected it. We're beginning to form a range. Okay, you have this swing failure down here. You trap a bunch of aggressive shorts. The return back to this level should never have been accepted for as far as it was. So once you're reaccepted back within a prior area where value is established, you just say, I'm stepping away from vacation and I'm going to leave it until we end up coming back to the high. And that more often than not, it's a silly way to put it, but that more often than not is what's going to occur. So we're back within a prior value area, prior composite value area. And again, if some of you are not following, you don't use market profile, go to your trading view, use your fixed profile, and this is your value area for the most amount of activity. 70% of the distribution, sort of like a Gaussian distribution, right? 68% of the values fall within one standard deviation. Okay, so 1 sigma, okay? So we're accepted back within a prior level where we had done business before. You just expect the same sort of mean reverse and same sort of mean reverting process to take place. Damn. Just looking at this real quick, setting a better stop. Looking at this also, as you can see, we have a weekly high close and a local daily close. So, I always say, make sure you're paying attention to other people's ideas of what are important levels as well. And I don't want to say that meaning like I don't, but some people, they don't think that daily closes, weekly swing points, daily swing points are important. They absolutely are. This is, one of your highest time frame levels that you could pay attention to that will signify to a lot of people that it's either green light or red light, right? So when you retake daily levels, so this is your most recent daily swing high, okay? This is also, I fucking suck at drawing. This is also, your weekly highest close. When you're back above that level, you're telling a lot of people that the conditions are changing. And again, remember, when we are within a range, we're amongst smaller fish, right? Within this range compared to this range, you have different, sizes of participants. You could still probably scalp this with a lot of size, but what I'm saying is when you really change market structure, and how we've drummed this in the past, you're bringing in people that maybe don't get involved within ranges, that they are waiting for breaks in market structure. So again, you're starting to fade much larger participants. So the weekly levels are really important. They line up with the value area, of course. More often than not, you will see confluence between these levels. So that's what we're looking at right now. I think that, again, this is 19.4 here. I think that ultimately I would want to see price establish structure above this 19.45, sort of 19.4 level. And that would signify to me that, hey, the market had been rejected lower and lower each time. Whatever seller was doing their job back here is no longer present. I think that you could get away with being a little bit more risk on over here. This kind of is starting to show that absorption was kind of, was showing at the low, right? So I'm not really focused on going over these levels down here right now. They're prior daily swing lows, a prior composite down here. Just looking at this more recent activity over here, maybe I'll give you an idea of why I immediately switched and got long. What we see into this structure, so going from left to right. So in this little left to right, you're looking at open interest that is increasing, CVD that is decreasing. So remember, your cumulative volume delta is the cumulative aggressive activity at the bid versus at the offer. Okay, so aggressive buys and sells, they're the ones that move the market, right? So when CVD is continuously moving downwards and price is maintaining the lows or moving higher, best case, and open interest is either staying flat or moving up, that's saying that these are new business coming into the market, a more aggressive selling over here than there was over here, yet price is not lower than the prior low. So if there's more selling coming into the market and this time we're slightly higher, well, it's telling you that there's a heavier hand down here now absorbing all that activity. So I was looking at this. I got into this trade literally right off of this, and I'll go to the chart. Okay, just to give you an idea of how some of the setups I take occur. So we're looking at, I must have saved the template accidentally under there. This is my setup right here. All right, got long right here. Okay, this was off of initially the aggressive activity that we had coming into the low. So once we started to base out, this really is where I added most of the position. So it was averaged out. Obviously, I didn't, just get in all at once. But let's see. I shared something with my buddy. All of you know AP on Twitter. He's one of the better traders, one of the best. This is and we talk all the time. So this is what I shared with him, and I was like, this is absolutely I don't even need to do that. Okay, excuse me, I can. I'm thinking I could just I don't want to pull our chat up though. This is what we were looking at into the low. So all of this aggression. So look at Bybit right now. So you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 million contracts into the low. So you see that right here, right? So this aggregates it based on the position sizing. So 10 million contracts into the low. From left to right, you have the CVD go from 213 to 221 million in the negative. So that is a lot of aggressive selling. And Bybit is sort of the home of the apes. So we joke about how it's the stupid retail that trades there now, which is like what gives the best signals. Part of that is a joke. But you see all of this aggression come in, and just think of it this way. A market moves up and down. Why? So people always try to joke around. People always try to say a reason as to why the market is moving up or down, and the joke is, that's what I meant to say, market moves up because there's more buyers than sellers. Market moves down because there's more sellers than buyers. And there's always one for one, right? There's always a buyer for every seller, okay? But what is misunderstood is that there are different types of buyers and sellers. There are passive buyers and passive sellers. There's passive sellers and passive, I said that weird. There's aggressive sellers and passive sellers, and then there's aggressive buyers and passive buyers. So there's a lot more aggressive sellers over here, yet the market ends up what? Closing higher than where all that activity came in. So it's telling you, hey, we're eating all of this down here. Someone is eating all of this. Okay, all of that aggressive activity that came in that actually is greater than the activity that occurred to the left of it was unable to move price as much as occurred previously. So I like to once in a while use volume candles to make this a little bit more clear. So if we're just looking at a 5 million volume candle, when the candles get really small, what is this telling us? Okay, so when you have small candles, when you have a small range, sort of like how you go from expansion down to this little pocket of activity over here, what that's telling you is that we're standardizing volume, so we know that each candle is created equally, but now the candles are getting smaller, so for increased activity you have less results. All right, so when I see an increase in selling activity but less results, I get on the opposite side of that trade because I'm looking to take advantage of that punishment that occurs as those positions are forced to unwind as soon as price trades back above the high. So I'll pre-position myself, right? I don't really often wait for, I say one of the better things to do is to wait for the signal. So you have this mousetrap. So you have this period of consolidation, poke the low, guess what? You're trapped now. And as soon as price trades higher, you typically see that these players are they're going to cover their positions. Which, if you haven't left this area but for maybe a few basis points, you probably have a good 1% to 2% move that is setting up. So aggressive buyers and aggressive sellers are, an aggressive buyer is someone who uses a market order to buy from the bid, the offer, right? An aggressive seller is someone who sells into the bid. So it's when you hit the market order button, right? You're an aggressive buyer or seller. And it means that you're guaranteeing fill and you're taking liquidity. So if you're seeing that a bunch of takers are coming in, but the market is still staying where it is, then that's a good sign that, hey, maybe someone is stronger than you on the other side. Let's see. Any questions? Let me double check. So we had that absorption over here. So I just think that, if I'm going to in the same breath say that, listen, first things first, I don't think that the move that comes up here is the move that takes us to new highs. So yes, Michael Saylor, for those of you that are unfamiliar with him, he has mandated that MicroStrategy has no cash, right? They are going to be a treasury built on Bitcoin, which is kind of fucking insane, but it's pretty awesome, right? Now, people think that, the market has to be contrarian in a moment like this because why would he tell the market that he's buying this much Bitcoin? Well, he's doing that because he's mandated to. It's like if he's issuing debt, he would have to make it public that he's issuing debt and raising cash. And it happens to be that we're benefiting from it because it's Bitcoin. So of course it's going to be public to us, right? This is an echo chamber already. So, it's not that he's telling us and he's like, hey guys, front run me. It's that he has to tell us. And you have to remember that the crypto market is still so nascent that there's still people on the outside that don't give a shit about this, right? So it's not like, it's not like Ray Dalio coming out and saying, tomorrow I'm taking the, $10 billion position in Facebook. It's not like that, okay? In traditional markets, you can front run big players if you do pick up on changes in momentum and relative volume. But in crypto, it's different, right? We are still early compared to early people. Okay, so you really don't want to second guess this kind of information. He raised $650 million. He's going to TWAP into Bitcoin. I don't think he has yet. The Coinbase volumes aren't really there to support it. And he has been resorting to actually using Coinbase to do this. Time-weighted average price means that he's using market orders intervaled by time, right? He's not putting a limit order up. He's not going to get filled for that. People are going to just step right in front of that. He's not using a market order all at once because he's going to create a tremendous amount of market impact. So what he's doing is probably optimizing during best market hours when the market is thickest. And, a time-weighted average price, a TWAP entry, is basically a market order every, think about it, 5-minute, a market order that's spaced out by specific intervals in time. So he is taking liquidity from the book. Now, $650 million is a material amount of money in any market. But in crypto, in something where there's a fixed supply, that is going to have a measurable impact, right? There's going to be market impact. So it's just really dumb to know that, of course, anything can happen, right? Someone is selling that 650 million contracts or 650 million BTC. So yes, there's a seller. There's someone who's saying that they're getting out of it at that point. But, that doesn't mean that the market, let me just put it this way. Even though there is a seller in that case and there's a buyer for every seller, it's like an eye roll moment because, this is something that is a signaling mechanism to the rest of the traditional finance space that is saying, hey, get your less than 1% allocation to BTC, get your foot off of zero. And, again, narrative-driven market like BTC, this definitely, we've seen how it's had an impact, a measurable impact on future prices when he did it last time for 450 million, I think. So if he's doing it now for 650, I guess the one thing I want to say is don't expect that it just moves up like this, but expect that, maybe we do a longer term version of this, and then ultimately 6 months from now, I would say 99% certain that we are at higher prices. I want to say, you know, a month from now, but looking at previous structure, you can't deny that there is a similarity between these structures. So I'm not looking for this to occur vertically yet. Could it happen? Yes, because contextually these were at major resistances. This is the pocket to financial freedom sitting ahead of us. Yeah, and I don't mean to take that seriously, but this is price discovery, right? We're at the all-time high. There is zero memory in terms of order flow above this level. So of course it could happen differently over here. You know, this is uncharted territory. All right, so let's take some questions and look at what you guys have to say. Let me pop out the chat. Smash the like button. Yeah, I know, my wife with the injuries. I am sporting a ponytail. Yeah, John, I have to, man. My hair is super long right now. Let's see. Okay, Zynga. So there's so many people that are coming into the space. And so right now you're going to see that in the next few months that there's going to be a lot of companies that say, oh, by the way, yes, we have picked up a off-balance sheet position in Bitcoin. Okay, now we're actually going to be filing to integrate it into our, you know, our on-balance sheet. So just expect that there's going to be a lot of a big increase in these larger players coming in. And, you know, it's easy to be really contrarian now and be like, well, that must mean it's a top. And it's like, no, you've had to, as a crypto enthusiast or a crypto participant for the last few years, you've dealt with people telling you it's been a bubble the entire time. Amazon was an asset that went up ridiculously, retraced 90%, 80%, went through a really long period where people are like, see, it was a bubble. And then guess what? You know, that was $100. Now Amazon is, you know, you do the math, how far it's traveled. So don't discount that. Aggression means crossing the spread. Delta profile instead of bid-ask profile. I'm not sure where you see the bid-ask profile. JE, are you talking about the bid-ask profile right here? I could use delta profile. Yeah, I don't know. I like to see, well, one, because I like to see the total amount of activity, not just I like to see the total amount of activity separated, because some of my best setups are, you know, they might on here look like this, but if you go okay, so for example, let me give you an idea of what I mean. Here, down here, you're seeing that yes, delta profile indicates that there is an increase in selling activity over that of buying activity, right, in terms of aggression. But what I don't like at the bottom for setups is when you have a lot of aggressive buying activity. So this case is a good setup because it is a profile that's built like this. This is kind of what I want. Most of the activity on the left-hand side. Not a lot of aggressive buying activity. I like to be able to distinguish that because I don't like the setup in this condition. You know, let's say that we had this all occur and then pop, we break down, and then, or let's say that even into these lows prior, that you have something along the lines of this, right? Where you have a lot of aggressive buying, but you still have a delta that's negative. I don't like to see that absorption is really coupled with too much aggressive participation. You know, a lot of the times I just want to, the best setups I find are the ones where it's completely passive. So that leaves me with a profile that looks like mostly aggressive activity on the left, and this is kind of empty. And buyers were like, no thanks, I don't want to buy this anymore. And guess what? That's the maximum point of opportunity right there. Because someone is bidding that up, right? Someone is willing to absorb that. So I don't know, it's just, it doesn't mean anything, right? Like my opinion on that, I've said many times, like my setup, your setup, it's all, ultimately you could get the answer the same way. You know, I'm not saying that you can't see that. You could look at that delta profile and see, oh, okay, we don't have a lot of aggressive buying activity if you have the volume separated, but I just prefer to look at it that way. What's a swing failure? So I'll teach you exactly what that is. I have a small amount of savings, pretty high regarding the other 90%. So I don't give financial advice, Bob. So if you're telling me about your savings, I risk pretty highly, but regarding the other 90%, what's the low risk way to capitalize in the next 6 months rise in BTC? So low risk way, it's a high beta asset. It's like, what's the lowest risk way out of a risky way? I would say if I'm telling my brother what to do, I would say, hey man, if you're asking a question like that, you probably shouldn't be trading too much. You should definitely, I hate to say dollar cost average because I think dollar cost averaging is stupid. So if you are confident in something, dollar cost averaging is kind of dumb. You should more often than not just tag on a position, rather than dollar cost averaging, which means a lot of the times, you're actually averaging up more often than not. In a lot of in the case of BTC, I feel like if I was to say to my brother, hey, so my brother asked me advice, what do I do with BTC? I'd say, hey dude, just take the money, market buy, walk away. Dollar cost averaging means you're averaging up. I think that in assets that you're confident in, it doesn't make sense to really average up. You might as well, take the pill, endure the pain of maybe a short-term drawdown, but you don't know, right? So I think that, I don't know. I don't want to give any kind of more specific advice. I don't want to say anything too specific. So low risk, it's crypto. It's very risky. Bitcoin is the lowest beta out of all the crypto assets. If you want higher beta, alts, right? But they're not investments. They're like VC punts. I don't know, man. You got to do your research. JE, that's on your EXO chart. Okay. Or longer term. Feel like there's another way than 1-for-1 Bitcoin buy. So a lot of times people use the term leverage wrong. Leverage should be for counterparty risk. Some people use leverage for increased exposure. When I was trading traditional markets, if I was trading with leverage, it didn't mean for counterparty risk. I wasn't worried about my, prime broker defaulting. So leverage actually meant increased exposure, or, if you are, and this is especially helpful if you're building multiple positions, let's say that you're a portfolio manager, but in crypto, leverage is primarily used for mitigating counterparty risk, so I don't have to put all my BTC on an exchange. In a bull market, you could probably get away with, I know that I can get away with increasing my exposure, right? If I have a portfolio that's $10 million, I could confidently buy dips with a little bit more exposure, right? That might be up to 2 times exposure. And obviously, you're incurring more of a drawdown at any adverse movement. But again, that is very specific to you. And I think that you should definitely educate yourself on those more, I don't want to say exotic products because it's not, but when it comes to those things. So that's, Dubs, good point. So this is one reason why, and I'm happy you said that. So one, a market can actually correct without pulling back when new participants come in. So this is one thing to go over. First of all, when new participants come in a market, it can allow old participants to get out without much of a correction. So for those of us that are waiting for those of not us, because not me, waiting for a 40% correction, just understand when you change market structure and you bring in new participants, the people that are exiting can be absorbed by all the people that are arriving. So a market can technically correct while moving higher. Okay, so getting that out of the way. The one thing that I'm thinking of right now, and it's almost like, it's not second order thinking, but if these levels prior were all levels of lower confidence, okay, so many of us were very confident down here, but just people as a whole have become more confident as prices rise, right? It's sort of the shiny object. Bitcoin is like a Veblen good, right? So higher prices beget higher prices. It's not exactly a Veblen good, but it's close to one. A Veblen good is like an Hermes. What bag do they have that's ridiculously priced? Birkin bag or an AP, right? Audemars Piguet, Peugeot, however you pronounce it. I should know. I have one, but this is there is something to be said for people being more confident up here. Higher prices begetting higher prices. So if we have more confidence up here and more participants, is there something to be said for this maybe being a little bit more indicative of the reflexiveness that we could expect, and that it is more crowded then because they are the ones that are responsible for this move. So then this move is ultimately going to require much more lifting to carry it further, right? Because just imagine this, like everyone is on board at this point now. or excuse me, more people are on board here than we're on board here, than we're on board here. So you have more people up here. So it's almost like a very, not a game theory way, but I don't know how I would put it. In terms of positioning from that, this is more crowded than this is, and then this is. But this is now more crowded maybe, but attracting more potential buyers at this point. So it's a weird predicament, and that's why I don't like to get into these like theories, or I don't like to go down too much of these roads, because ultimately what I do is focus on, okay, where are my important levels? When this level changes and breaks up, when this level changes and breaks down, okay, then the story is clear at that point. And I'm taking my trades a lot of the time, I'm determining my higher time frame trades off those levels, so why not just let them speak for themselves instead of trying to talk for them before they occur. In terms of a swing failure pattern, I'll use this as an example, but ultimately, so swing failure is when you have something like, people would have thought that this was a swing failure up here. You have a market that creates a swing point. We'll use it in the case of a bullish swing failure pattern. So let's say that the market has consolidated, okay, put in a low, let's say the last daily low, and I'm going to use this because it's going to be useful moving forward. So we're consolidating, putting in lows, and then the market dumps through the low and then recovers the low. Okay, a lot of times you see that it occurs on major higher time frame lows, such as a low and then a break below that low and then a recovery above that low. So the idea is, as a market, we'll use the case of moving down. This is something that's really useful in altcoins. As a market is moving down on high volume, you have a really high increase in volume, volume's going up, you get a big splash down, you create this major level. You get a really strong response off of it, price consolidates, volume drops, and then you get a second puke through the level. Now the level over here becomes really important because that's sort of the major inflection point everyone's paying attention to look for a continuation to the downside. So this represents a good opportunity for a trap and a lot of liquidity to be picked up here, because you know that there's stops down here from longs that took off from here. There's breakout stops for shorts looking to enter, and there's stops for, there is breakout shorts looking to enter without even a stop upon this break, okay? This is a defining feature within market structure. So the market will often move through this point. You'll see a really big increase in activity, and then when it recovers, you'll have a huge play for the, in this case, the opposite direction. This is what a swing failure looks like on a chart, right? Major low, or it can occur at a high. So break of the high, it looks like it's a breakout trade, closes back below the low, you trap all the longs up there, and you puke back down. It's a trap, right? On a footprint, one of the things that you could look for are on something like a footprint or a a regular candle chart. Ultimately, what this looks like is, and if I zoom out too much, it's not going to allow me to scale enough so we could see this. What you'll see is, we'll just we'll draw this out. So, for example, you'll have, let's say that you'll have multiple lows. That doesn't make sense because how it, all right, okay, like this. Okay, and then let's say that on each one of these was, come on, let's say 20 million, 20 million, 30 million volume, right? So that's the respective volume for each one of these candles. Okay, so initial big splash, reversal. Okay, market comes up, consolidates, hangs about, not doing a whole lot of anything. All right, I'm liking my drawing skills, actually. I'm just anchoring from the last point. So this is the level, though, that everyone's got their eyes on. They're like, that's the fuck zone. Don't want to break that again. If this is a low, I'm buying this low. I don't want it to break there. I'll put my stop there. There's a ton of liquidity down here. Now, this was a high volume low, right? So look at the volume. So on something like footprint bar statistics, you could see the volume broken down. But if you look at volume candles, that should be fine too, right? One is obviously a little bit more refined than the other, a little bit more atomized. So this, now, the volume that occurs in the structure is more like norms, right? So 5 million, 4 million, 5 million, 10 million, you get the idea. It goes back to what maybe were baseline volumes for this candle setting. So let's say that this is let's say it's a 30-minute chart, trading this off a 30-minute structure. This is, you know, the average 30-minute candle volume for the last week, okay? This is an outlier. This is exceeding above the norms. So it's a multiplier, but it's a multiple of the norms. So this is always when you want to pay attention, period. Increase in ATR, increase in volatility, increase in volume. So you get that at the low, price begins to base out. Now, the swing failure should occur on a substantial increase, again, in activity. So you're getting a lot of, you're breaking the low, you're bringing new participants in, you want to have new volume come in, and then you get something like, let's say, a big puke, right? So 40 million contracts traded. You know, next candle, 35 million contracts traded. The idea is there's a lot of participation below this low. With delta, you would want to see that it's a very negative delta. Let's say that from left to right translation, the deltas for these were like -2, -3, -5, right? And over here was -20, -15. You want to see that the delta over here is, you know, again, maybe -15, -30. There's a ton of selling through this low. Okay, so your swing failure, this is setting up the conditions you want to see to take advantage of if price now is recovering the prior level. So you saw that a ton of activity came in that was multiples what the norms are. So these are the norms, and they usually occur in the consolidation. Things go back to norms in the consolidation that follows the splash. So you want to see that a ton of participation came into the break of this. And now guess what? For that increase in participation, for that new selling activity, what is the market able to do now? It's actually able to recover the prior level that served as the inflection point. So, aha! You know, for all of that increase in selling activity into the low, guess what? We weren't able to continue what was the trend, because you have to imagine this low was used to think, okay, this leads to this. So that participation increase that we saw down here is expecting that, is positioning for that, right? The best case scenario is from this structure, from left to right, this leads to an increase in OI, right? Open interest, new business opening, right? Not longs closing, okay? Because you could just have longs close out because they got stopped out. You want to see a trap sets up. So open interest goes up. Now they're anticipating that this was going to lead to continuation, right? Instead, price recovers a prior level. So when we're paying attention to price action, we're just really paying attention to, you know, the strength in between buyers and sellers, or rather the patterns between buyers and sellers that really make a case for strength or weakness. So when you're retaking a prior level, if you're creating structure, and I always try to simplify it on the way down that looks like this, well, what would strength look like? You know, if you're consolidating between here, you create some micro levels, you puke through the low, strength would look like reclaiming a prior level that served as a pivot on the way down. You know, this said you shall not pass. This time we're treating that as support. Now you have a setup where, oh, okay, shit, we had a lot of volume. You have a big increase in volume down here. Looking to set up price action wise. Okay, we're looking for a mean reversion, and we're going to use those sellers at the low as fuel. Hopefully that makes sense. We have like an entire roadmap on this. Okay. So short covering, if you see short covering in a profile, it could look something like this. Just a profile, for example, at the lows, or even shorts being liquidated, you're going to see, one, the profile has the activity on the right-hand side, so it's aggressive buying activity to close the shorts for the most part. And two, the open interest should go down. So short covering is coupled with open interest decreasing. For one, obviously. Question on T count as it pertains to vol and XO. Is this different than the trades count added to footprint bar statistics? T count. Which T count? Someone asked the other day tick count, and they said T counts. I don't know if you're talking about that. This I've actually haven't used at all. Yeah, I've actually never even looked into that. So rather than me give you an answer right away, I don't want to say, because it might be T count and something else, but this should be trades count. So this should be trades count. That's what I would guess. Trades at the bid, trades at the ask. But Kilgore, don't quote me, man. And Kilgore, I appreciate you sending me that link the other day, but New York doesn't allow you to receive, like, you can't buy AR ammo from out of state. It's fucking pain in the ass. Exo templates. I've shared them for yeah, people in the DMs. How do you know that swing failure before it happens? Well, you don't, right? The same way that I can't predict where price is going to be 20 minutes from now. You look for it. So beach ball, what you're looking at when you're marking out market structure and important levels is you're having. So when I look at, I've made it clear before, like my priority is not necessarily to pay attention to always the daily levels or the weekly levels, because we're not always around them, right? It doesn't make sense to like put that at the forefront of my thinking if we're not always going to be interacting with them. A lot of the levels I look at are pretty much levels that I'm seeing that are being built over time on the tape, right, or the footprint, where I'm seeing a good amount of activity begin to increase from a volume standpoint and order flow standpoint. Major levels, though, based on market structure, I always have in mind, but we're not always dealing with them. The next order of levels that I look at are the ones I establish by looking at the TPO. So I go down to, TPO. I can pull this chart open. Why is my template not coming up? Sometimes I got to reset this. Fucking XO. If it was like Sierra, it'd be a lot easier. No disrespect to Varen and them. I love this platform, but it just takes a little bit of difference between this and Sierra charts, but they're really making something awesome. Next, I go down to the TPOs, right? I want to know where our major composites were, where value had been established. I want to pay attention to where we are within the prior day. Looking at yesterday's value area high, are there any poor highs and poor lows? Yes, we have a poor low. So now I have a little bit more refined levels to consider that might be areas to do business. That's all it is, though. A swing failure, before a swing failure occurs, what is it? It's a high that was left in market structure that we would look to, or it's a low, right? So if we're in a really strong uptrend, swing failures can happen during the consolidation that leads to the next impulse. You have a pattern that has put in a high. Sure, it has put in a low. Technically, yeah, you could look for a swing pattern at the high, but in a bullish pattern, you might more often than not see that you get something like this at the low, which kind of is a swing failure within a consolidation before a markup. So the idea is you just have a level in mind earlier to look for, okay, we look for this kind of activity. Okay, I have a poor low. Why do I keep an eye on where my poor lows are? Well, let's also consider context. This poor low has occurred not because price lost momentum down here, but because it's 24-hour market, the market opened up here during a trending period. Okay, maybe this poor low is not that important. A poor low at the high, right, in an area that hasn't been retested in a while, maybe that's a more important poor high to pay attention to, excuse me. So this is kind of a poor high, but it's not the kind I'm talking about, which would look like dull, right, flat. So I know, okay, let me mark that off. Let me consider that maybe this might be a good area for a swing failure, because normally at poor highs you might see either one, a breakout trade, or that stop hunt. Okay, now that I know that, I'm going to look down on the lower time frame and see the kind of activity that comes in through there. All right, so we get the move up. There's been no absorption yet. Okay, we're getting a retest that's sold. It's being held. 10 million contracts comes into the retest at the break of this poor high. All right, so maybe it's not a cleanup at that point. I'm looking for the long side of things because this is being sold and it's holding. So really it's just I'm defining areas to do business with in the future. I'm not trying to predict what it's going to do. I just want to know where the game is going to be played. Will Ave continue up over time? It's a good question. I'm in Ave. I added to Ave. I'm in SNX, like I said. Let's look at Ave. I think Ave. So I don't give financial advice on this platform, right? But I think that if you exercise a little bit of thought, if I'm long and adding to a position, I'm not long and adding to what I think is going to be crashing over time. I think that for people who have known me for the last 4 years, I shit on alts forever. So if I'm picking some alts, I think maybe that means that I'm confident in them, right? Clearly. I think SNX, Ave, they're been the higher correlated DeFi pairs. I think they will remain. And they're blue chips in the DeFi space. And I think that stands for something because they've been very strong. It's not that I'm just calling them blue chips. It's that they've held up more than anything else. Sushi also. I was in that Cointelegraph interview 2 weeks ago, and someone was talking shit about me because I was like mentioning, oh yeah, by the way, I'm also in sushi, and they were talking shit. And I found them, and I made sure they knew that sushi went up 100% since they talk shit. I was being kind of a ball buster, but I said, hey, yeah, remember that? Yeah, take a look at sushi now. It's up 100%. I was treating it like a trade, but sushi is, again, sushi, go with strength. In the beginning of a bull market, if you're going to extrapolate on anything, go with the things that are strong. So yeah, I think that sushi, SNX, Ave, look at the BTC pairs, right? What is showing strength against BTC? So this is consolidating. It's not breaking down tremendously against BTC. So this is your chart to look for relative strength, right? So many people, they trade alts because the USD chart is moving. They're not looking at the BTC pair chart, not even recognizing that BTC is outperforming it. And it's like, why the hell would you want to be in anything that was less liquid? If you could be in something that's more liquid, that's respecting technical levels more, that you know is going to probably be, not to reference Lindy effect, but it's probably going to be around longer than that alt. Why would you want to risk it in that alt if you're being outperformed by something that is just across the board a more optimal position to be in? So Wi-Fi, I think the same thing. Comp finally showed up. I got my ass kicked in comp back here. I never even bothered to look at it again. And what did it do? I would have been stopped out either way, right? And I was trading this on perps, but it ended up moving up. So it is what it is. You win some, you lose some. You try to win more than you lose. Let's look at ETH, and then I'll take some questions, and then we'll wrap it up. And I'll give away $100 in BTC. Where's the list? All right. ETH. We'll pop out the chat again. So yeah, I just think the ETH is kind of doing the same thing as BTC. It's saying that it looks like a flag, but I just don't know if you get the break up and then we just range longer. So when I'm saying this, I'm just meaning, hey guys, I'm not pre-positioning for this being the flag breakout of a lifetime. So my longs right now are just longs into resistance, or longs that are, in the case of BTC, very short term. And I actually, while we were doing that, I moved my stop up. I didn't have it on, and then on the side, I ended up putting it up. Okay, and I am now out of that position at 215. Okay. So yeah, I closed that long got closed. It is what it is. Okay. So yeah, that's not bad. We'll take that. We'll take that. Small move, but 200,000 contracts. It's probably like $800 profit. So anyway, okay, one sec. All right, where'd that chat go? That's what I'm thinking. Here we go. SCRT, first front running resistant AMM. Yeah, so Z, the way I feel about things like that are supposed to do something, I feel like the market is not efficient, that it reflects all things, but I feel like when something is incredibly dominant, it'll be more reflective in price action. So if I look at this chart and it's not standing out as incredibly strong. Oh, Secret Network. This used to be Secret Network relabeled. It was Enigma. Right? Yeah, it was. So this is a good looking chart, right? This is also a good looking chart. So I was just saying, if you're saying something right now and we go to it looks like it's shit, and then you're saying that it's supposed to get rid of something that's strong or maybe be a competitor, I was going to try to front run what you were saying and say, like, everything right now that is strong is reflecting it in the chart. And I think that since the market is in the early phases of a longer bull market, that you should go with strength. But yeah, this looks good. I mean, if you're looking at this against the weekly, all the criteria I would want to satisfy. Now it is, I'm pretty sure this was Enigma. So the Enigma chart was looking decent a few times, but chart history plays a really important role in psychology. Remember when the dude fat fingered something on Binance and CZ didn't want to refund him because he said he ruined the project's chart? And there was something to be said for that. One, there was someone on the other side of the trade, so what are you going to do, reverse it for them too? But a new chart like this, a lot of traders go off of technical levels and their confidence is based on that. So when you have a chart that is arriving at the perfect time, meaning all things are moving up, and it's putting in a pattern like this, you don't have enough really weekly structure to get your major point besides this highest weekly close, which is the beginning. But hey, that looks good, right? So you're looking at this on the daily. Prior range breakdown, barely any bottoming structure. Really nice. No major increase in selling volume, and now you're back above the level. Like, it's looking like a really good chart, honestly. So I don't know a whole lot about it. I remember being more involved in it. Josh had put me onto it. I'm pretty sure Secret was what I'm thinking was Enigma. I'm sure by the time I go to the chat, yeah, it was ENG, right? So yeah, and then I'm gonna wrap the stream up, and I'm gonna go over a platform that I wanted to feature. So yeah, it was ENG. So if you look at the ENG chart, it's a little bit of a different story. But hey, they changed. Okay, so I'm gonna wrap it up, guys. But I want to show you. I want to dedicate the last portion of this to a platform that I am now sitting on an advisor with, or rather, I'm going to be sitting on as an advisor. There'll be another really well-known person in the space that is going to be helping along with that as well, and that is Mudrex. Mudrex. We know that I can destroy certain names for companies, but this is a platform that I used in the past. So you can see this is a test that I did a long time ago. It's not running anymore, so I don't even know what this means. Current value is 20,000. It might be still acting like it's running, so it might be a sim that's running. Overall returns 99%. This is a good advertisement for them, but I got to be honest, I'm not running anything on this right now. But this is an automated trading platform, and I'm going to be doing more things on this in the near future. I'm not going to be shilling it like it's a product that I'm not going to get some kind of RefLink kickback. Make sure with Edul that it's not like that. Working with the team, directly with the team. This is something where you can go on to the platform, and if you want to sign up for the platform and check it out, the only thing that this link is going to give you in the description below is it's basically your initial 2 to 3 months for free. So it's going to be paying the fees that you would have to normally pay. It should cover the sign up, and if you want to play on this, it's more than worth it. So what you can do with this, so let me just backtrack for a second. In crypto, there are really simple strategies that work if you apply them systematically. And I mean that it is stupid how much they work. And I'm talking about things that if you spend a little bit amount of time experimenting with some moving averages, some systematic trend following strategies, and these are things that you don't mess around with, that you can perform incredibly well, right? The thing about systematic trading is you don't meddle with it. Okay, you don't step in when there's a drawdown. You want to backtest these, obviously. If we're looking at a market right now that is on the cusp of going into a major trending period, you could probably be really confident that the historical data for a market that has been in a secular positive bull trend for the last 12 years is probably going to stack up moving forward when it's forward tested. So if you find things that are performing exceptionally well previously during trending periods up to this point, then you could expect that they'll continue to do very well in the future. So messing around on this platform can yield tremendous results, right? And I'm not going to say that it's going to be something that is easy as, stepping on here, depositing depositing a little money, connecting to account, and then suddenly you're beating the market for the next 10 years. But I think that in a trend followers market, this is something that is really good to use, because there's going to be periods where you're going to want to look at this market from a trend follower standpoint and apply the same maybe logic or vectors that you would if you were a systematic trend follower, where you would say, okay, I'm going to buy when there's this crossover, sell when there's this crossover, and if I get those signals, I'm absolutely taking them. The problem is when people create systematic strategies and they step in, okay? Once you add discretion to a systematic strategy, you completely can throw it off. You could destroy the performance, right? Especially with a trend follower strategy, where it might be, and a lot of the times it is, that in trend following, the return profile is similar to the return profile of my header on Twitter. So for those of you that are unfamiliar with what my header is on Twitter, this is a positive return distribution, so a positively skewed return distribution, which might mean that you have a bunch of small wins, right? And then a bunch of small losses and then a massive win, okay? Versus a negatively skewed return profile where you have the tail being unfavorable. You have that massive loss that wipes you out, sort of like selling options for income investing, selling options for income. So if you are, if you are messing with a systematic approach that you see works, you could potentially take out that one sample return that makes the most of the return for the year, right? You meddle with it and you miss the 60% of the trend that actually makes the strategy. So the benefit of using something like this is you can create a strategy. So we could go to strategy. So we'll go to create new strategy, visual editor. And all this is, if you want to get into programming, you could use that on here. But if you're someone who just wants to go off of indicators, I could take any indicator, right? So indicator, double click on this, anything that you find on TradingView, and I could set a condition, any conditions I want around that to create a strategy. So I could create a moving average crossover strategy. I could base it based on Heikin-Ashi. I could make it based on candle closes, candle opens. I could create this strategy tree where, for example, let's say, let's just look at the chart right now. Let's go to BTC. And one of the best things to use with BTC on the high time frame has been higher time frame candle settings. So we'll go to Coinbase. We'll take this off. Higher time frame moving average. Let's say the 20 and the 9, right? So we'll make the slow period one be the longer, and the fast period one, or rather the shorter period one, be the faster. So we want to create a strategy that incorporates the 9 period and 20 period crossover. Okay, you could just build this right away. All right, and use the 2-day setting. Okay, use the 1-day setting, and you'll be taking buys after you have a candle close where this occurs, and you'll be selling where it begins to downtrend. And you can see that in this sample, right? It's only been really favorable, with exception for a few periods where you got chopped up. But you could really refine this. You could, and I'm just trying to create the most simple, dumb thing off the top of my head. Don't take this to the chart right now and start doing it. You could say, I want the buy condition to be that, but I only want it to be that when on balance volume, or let's say when relative strength is above 50 points, right? The RSI is above 50. If we get the signal and the RSI is, excuse me, even better, when it's below 50, okay? I want to take the signal when it's below 50, okay? So it's a maximum buy opportunity, I'd say. But if the signal is 70 when this occurs, that might be what is occurring at the high, and that's just maybe a false signal that's going to chop me up. You could refine this in any way possible. That's all I'm trying to say. So this is a really useful platform because this connects to all of the major exchanges. And you could create something, let it run. And the reason why I'm saying it's perfect for right now is because this is probably going to be going back into a really friendly trend following market where you really want to be just maybe not as active, right? Unless you have a proven edge or alpha on the low time frames, it might be to your benefit to, if you don't have the guts to buy and hold, to implement something like this so that you can capture 60%, 70% of the moves, right? And if you don't want to create it, there are strategies on here that are already proven to be very profitable. All right, and you might think, well, how is this? Well, it is because the market in crypto is still inefficient, and you have people that are willing to sell the rights for you to use it for a small subscription fee, and they're all back tested. Okay, and then I also know of a few that are being added that are the only way I could describe them is just incredibly exceptional. So this is something that you're going to see is this is going to become more popular. Now is the time, I think, to be using this before you have a market that is kind of like smoothed out over time, where the edge and the alpha is being kind of sucked out, right? It's receding to maybe the longer term holders or the more more crude swing traders, and the lower time frame trading is going to be more high frequency. It's going to be a little bit tougher to maintain an edge down there. Not to say you can't, right? But this is a phenomenal platform. And again, the link is below if you want to try it out. I'll be sharing more on this. So if you want to wait, by all means, if you want to wait for me to cover it in a bit more depth, I'm going to be doing some of the stuff on their platform for them. They're redoing this UI. So if you're looking at it right now and you come back to it in 2 weeks, don't be surprised if you see that things have completely changed. But I have a friend of mine who has created a strategy on this that is absolutely just destroying Link, ETH, and BTC. And the idea with this is you can increase your leverage to increase your exposure on this. And the healthy amount is between 1.5 to 2x. And you see that it makes a drastic difference in the return profile, right? Or the returns of the performance of the approach. And in things, so I'm just a hint, if you find things that are, if you look at something like a correlation matrix and you have up to this point, right, who knows, Link, ETH, maybe DOT, what are the things that are really positively correlated to BTC? Okay, so we're going to identify those assets. Those assets are likely to trend hard with BTC. How nice would it be to apply a trend following approach where you're not even looking at it, okay, to capture a lot of that beta? So not saying it's necessarily, going to be alpha. Some of it might just match the performance or maybe slightly exceed it, but it's better than for many people. This is the point, and this is what Idul was talking about. This is better for a lot of people who don't know what to do, right? There's a lot of people who should have allocation to crypto, and they're not even able to buy and hold. They're not even able to say confidently that they're willing to hold. So if you give them something like this and you show them, okay, under these conditions, you're going to be removed. Under these conditions, you're going to re-enter. You're not comfortable maybe doing this on your own. There's a marketplace for this where you could get into someone else's strategy. I think there's just a great deal of potential for this platform. So give it a look. The link is below. And if you don't have any other questions, guys, we're going to go ahead and give $100 away in BTC. I'll look at CRO before we do that. Look at CRO. We haven't had much of a change. I'm out of that position. So it's all good anyway. I don't like to, when I have these little setups that we're just looking at right now, I like to see them I like to see that aggressive selling, for example, unwind pretty quickly. Let me get these moving averages off and the RSI off, because you won't really see the RSI in my chart ever. Back when I was more passive in crypto, that was a period where I would pay attention to some of the higher time for some of the more crude indicators, not crude, but some of the more popular ones you see. They're phenomenal, right? You could use an RSI by all means. I know traders who use RSI and they use it and they're extremely profitable. It's just I like a little bit more of the approach that I had when I was trading equity derivatives and crude oil. So let's see, CRO. Take care, buddy. I'll talk to you soon, man. Kilgore. Okay. Yeah, I mean, this is kind of like, hey, are we setting up what was kind of similar to a swing failure? It's not exactly the same at all. But what I like to go off of with alt in particular is I need to see the structures reclaimed. So this is a fucking ugly chart, excuse me. All the way back at major higher time frame resistance that should act like support now. That's fine. It should act like support, but it doesn't mean you want to buy it after it returns there. So for short-term opportunity, I would need to see it back above this daily level. But I don't... Crypto.com, is that CRO? Yeah, Mudrex is awesome. So let's see. What was I going to say? All right, so I want to give away $100 in BTC. I'll look at Mana for Sweet Canary because you're always here. And then we'll wrap it up. Kind of looks like one of those pumpy charts. Hey, looks good, right? Here, I don't change it up, right? My criteria is the same for alts, weekly levels. So we have this major weekly level, contextually major shift there. Now it's acting as support. You get the poke through the low. Really good sign when you get a grind down to low and then the pop up is above the prior structural support levels or the prior levels on the way down. So if you have, this little support area, break down like you're going to continue down, but now, so it's kind of like that swing failure idea, right? It's a trap. That's what a swing failure is. A lot of people think immediately this when they think swing failure. But the idea, the theory behind why it works is the same. So this is good. Treating the top side of this last period as support now, this looks decent. Mana looks decent, in a consolidation like everything else is. But I would say confident that if Bitcoin and everything breaks up, this does too. All right, so let's give away $100 in BTC. This is going to be to the first person who can answer this correctly. So I'm going to ask a question. The first person who's the fastest person to type it up wins $100. And I think we've probably given away a Bitcoin worth of giveaways this year alone. So let's see. I gave $500 away last week. Okay, I do this literally right off the top of my head. So, all right, what are two things that we want to see if we're looking for a trap setup on a break of a level? What are the two most important things that we want to see on the break of the level? And then the first person who answers those two things, and I don't have a multiple choice, so it's going to be what's close, right? The two most important things I want to see on the break of the level. So we have the break of the level. What do we want to see? If we're setting up this kind of setup. Here's the break of the level. If we're looking for a swing failure, what do we want to see? No. It's a word. What do we refer to it as when we... Two things. They're related. No. 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 You almost had it, Mahal. No. Okay. Yeah. Yeah. All right. Closest one so far is Werner. Closest one so far is Werner. He said increase in, I know you meant to say OI, so increase in open interest and volume. So it's an increase in participation, right? So volume delta, but an increase in participation. So if you said participation and volume, if you said you know, delta and volume, delta and OI, that'd be fine. But the first person to say it wasn't acceptance below the level because we already said the level broke. It wouldn't be acceptance because acceptance would mean that it would probably lead to continuation. Acceptance doesn't just mean that the level is broken. It wouldn't be, let's see, low volume for sure. It'd be an increase in volume. It wouldn't be necessarily low price movement because you never know if you're at the point before it continues to break further and it's just stalling. You want to see that it is an increase in participation, really. Julian, you said that? Let me see. If you said it first and it's up there. Let's see. So Werner is above you so far from what I see. Nah, you said, I said two things, Julian. I said two things in the question. Sorry, man. So I'm looking back. No, you came in with volume, but I said two things. You had to give me two things. Werner said the two things that were closest. I win. David, what do you mean you win? Moon Lamborghini? Well, you do enough of it, you might win that. Okay. So, David, you didn't say participation and volume though. If you said those clearly, I would have saw them. And no, you said Peter Schiff is against it. Involves XRP. Well, you didn't say that yet, so let's see. No, Werner has it. No one jumped ahead of Werner. Before Tony Blundell message, let's see. I'm giving you the benefit of the doubt. I'm going to show you right here what we're looking at. So I'm looking at your name, Julian B. Okay. High volume, break and hold. Okay. Literally before, let's see. Julian, here you go. Volume right there. You said volume. Nah, see, I asked the question and then you guys started answering right here. With glad started answering. No, so I said give me two things that were closest. High price didn't matter. Aggressive trap sellers, buyers, obviously that's not. Break below level and swing back and reclaim. That wasn't what we were looking for. Acceptant, nope. So Werner is the first person to say anything that's remotely close to what I was asking for. So yeah. So Tony Blundell, I'm looking for a Tony Blundell to see. No, yeah, you're just not seeing the chat further up. That's why. So Werner, send me your Bitcoin address. Sorry, Memez, you came back. What's the saying? Early bird gets the worm, second mouse gets the cheese. No, Julian, it doesn't matter. It doesn't need to be a timestamp. I see it on my chat, which is where I'm, ultimately going off of, right? If there's one judge for this, who do you think it's going to be? It's going to be me. I know, I'm just messing with you. Julian, don't worry, man. We'll give you a softball next time. Okay. Everyone, have a fantastic day. Thanks for tuning in. Yeah, I'll see you guys on Wednesday. Do Wednesday again at 12 p.m. You know, I cut myself out of this. We'll just look at BTC one last time. I cut myself out of this trade because and I'll just give you some insight as to why. When I see a setup like this, when I see that amount of volume, in this particular setup that I was looking for, you know, paint the situation to it prior. I was talking on Twitter and I was like, I don't know. I'm going to maybe be with the bears soon. And I was talking about it, maybe a pullback, or alluding to maybe a pullback. So the fact that I got long was because I'm looking at a short-term opportunity based on a lot of heaviness into the slow, where I thought in my head that the trade would occur where I'd at least get a poke up here. I don't like that it's a break up after that spike and it didn't resolve in a bigger spill upward. So yeah, maybe this does consolidate and break upward, but for the position that I was anticipating, if it doesn't occur the way I want it to, and I'm getting in on behalf of a system that I use that normally, so I guess this is the more important thing, this setup for me normally yields a certain result in a certain amount of time. If I don't get it, maybe it comes after, but I'll be out of the trade. Like I don't start meddling with a system that has a 90% hit rate. There is always going to be that 10% of trades that fail. There's always going to be those in the sample that I don't continue to take that still yield a positive result, right? I took the trade at, I started scaling in. My average price was what? It was 19,134. So I got out at what? 215, 208, 200,000 contracts for $80 move. I'll take it. You know, that's almost a K or $800 worth of profits, whatever. All right, guys. Until next time, it's been a pleasure. I always look at open interest. Absolutely. We've gone over that a million times. It's one thing that I always mention. New business, open interest. That's when I say new business, that means open interest increase. Everyone have a fantastic